Hi, this is Bruce Dorpalen from the National Housing Resource Center. Welcome to the Leaders in Housing Counseling call. Welcome, Happy New Year to all, and welcome to 2015. We've got a lot to do, and it's a lot on the plate. We've had a tremendous 2014, so we have high expectations for all the good work you're doing and work we'll be able to do together in 2015, and we'll talk a little bit about it today as we go on the call. We're just going to get started because I think we're going to have a crowded agenda today. We want to make sure we hit all the bases. And so people might be joining us as we go. We have a good turnout for the call today, so we want to get things rolling quickly. And we're going to do a quick rundown on the housing announcement that President Obama is doing right now as we speak. And we're going to give some quick HUD updates just to make sure people are all on the same page on things that we've been hearing about over the holidays. We have the NCLR and NHRC Mortgage Servicing Standards Survey is getting published as a full report. We'll have Nancy Wilberg-Ricks from NCLR to give you a quick view, but many of you contributed to it, so glad that we're getting it out on in a more formal form. And it's a year anniversary of the servicing standards were released a year ago on January 10th, so that's Saturday, and the idea was that NCLR thought it'd be good to get the report out right beforehand to get a good tie-in. And we'll have Ruth Susswein from Consumer Action, and she's doing a lot of good work with the CFPB on consumer complaint systems, heading up a broad coalition of advocates around this. And since you all have direct experience about what problems people are having with servicers and hopefully some experience with the CFPB system, what we'd like to do is get your ideas about where the CFPB should focus its attention around mortgage complaints, and we'll talk about that in some depth. So be thinking about what would be the most helpful things to get solved that could be done by CFPB. They're a system that's swamped by thousands and thousands of complaints, but they're looking at what are the more complex problems that could require their attention and how could they handle it. So Ruth will give us a lot more on that. And then we're going to spend hopefully about half the call just talking about plans for 2015 and what we're looking at, and would enjoy your input if you've got some thoughts about things we should be adding to that list. That should be more than enough, and of course joining NHRC. So let's dive in right away. So the first thing is, so President Obama is speaking right now in a high school in Phoenix, Arizona, and it's his housing speech. So Matthew, what's going to be in there?
Yeah, so this is a really big deal. People have been excited all week about it. The President is announcing a reduction in FHA's annual mortgage insurance premium. So the rates, it's a 50 basis point reduction, so it's going to go from 1.35% down to 0.85%. So the estimate is that it's going to save the average homeowner about $900 a year. And the really exciting thing is they expect it'll create the opportunity for about 250,000 new homeowners over the next 3 years. So everyone on the call knows that access and affordability have been really big issues in recent years. It's been very difficult for average families to access affordable mortgage credit. The number that really struck me was the National Association of Realtors had an estimate that nearly 400,000 credit-worthy borrowers were priced out of the market in 2013 because of the high cost of FHA premiums. And the groups that are most affected by this are low-wealth borrowers and people of color, because those groups have traditionally relied most heavily on FHA loans. There is a lot of pushback, though. There already has been, and we're expecting there to be quite a lot more coming from the right. And so we wanted to kind of talk a little bit about what those issues are and how to respond to those. Really, the main argument that gets made against doing this is people will express concern over the health of the Mutual Mortgage Insurance Fund, which is the fund that FHA premiums go into and backs FHA loans. we won't go into the kind of nitty-gritty details on the health of the fund, although the short answer is that it's doing a lot better, and the expectation is that it's going to continue to do a lot better. But the really, I think, salient point here is that analysis has shown that these high premiums, so FHA premiums, folks probably already know, have gone up dramatically in recent years, and they're now coming down, but still higher than they were. But the high premiums are actually hurting the fund, and that's because they're making FHA loans less competitive relative to alternatives, and also pricing people out of FHA loans altogether. So FHA has been losing market share as a result of the high premiums. So in fact, lowering premiums is going to be expected to be a net gain for the fund. The other concern, and this applies here, but also more generally, I think it's something that we need to be thinking a lot about and responding to, is people expressing concern that we're returning to the kind of dangerous pre-crisis lending, the subprime and no-doc lending, and all those exotic loans we saw before the crisis. The important point to stress here is that FHA loans are 30-year fixed-rate mortgages. They're fully documented. These are not the subprime loans that got us into the crisis or contributed to the crisis. Another response to that is in a study the Urban Institute did. They found of FHA loans originated in 2012, the default rate was just 2.3%, which is very low. So those are just two of the things. This is, I think, the really important point, the positive point to be stressing is that this is going to increase access to affordable, safe credit for credit-worthy borrowers. So the thing that we're asking folks to do, and hopefully everyone has seen the email that we sent out this morning, but that's to submit a letter to the editor to your local paper. So we sent a sample letter that you can use either as is or you can tweak. And I've gotten some responses from folks, and they made some tweaks to kind of make it a little more local, which is great. The more local, the better when you're trying to get something in your local paper. But that would be huge if we can get some letters to the editor in papers around the country showing support and kind of pushing back against what we expect to be the negative response from the right. And one question came in. So it's whether the reduction will be for new originations or for all borrowers. I believe that it is only going to be for new originations, but that folks who already have FHA loans would be able to refinance into this lower rate. So it would, I imagine it would make sense for a lot of folks that have existing FHA loans to refinance. Bruce, do you want anything on that or anything else?
I think as a council, you'd probably want to cost it out, figure out if, in fact, it makes sense for the costs of a refinance to do it. But yeah, that's exactly right. It'll apply to new origination, new purchase loans, and it will apply to refinances, but it isn't retroactive. So people would need to refinance in order to get it if they wanted to do that. And of course, looking at other refinance options that might be more competitive or something as well. So I think this is interesting. This is sort of an experiment on our part. We've talked in the past year a lot about how do we get housing counseling out there more in the public sphere, and how do we influence the debate more. So Matthew's put together this small campaign. This is an issue where there's a lot of pressure on FHA not to reduce premiums, and I think to all our constituencies, this is an issue of affordability and access, and FHA's got a problem, which is that they are a relatively expensive loan now in the marketplace, in the more conventional marketplace space. So this pricing's important for keeping FHA viable, but there's a lot of resistance about reducing the amount of money going into the fund. And I think the counter-argument, as Matthew was saying, is if you don't do this, it's likely they'll lose market share, and the fund will be hurt that way. So this is a more kind of progressive way of addressing it.
So the experiment is, can we get enough stuff out in the newspapers that people might see that might create some buzz or awareness around the issue, and less of kind of a negative view of what FHA is doing. So we're going to give it a try. So please let Matthew know if you're submitting letters. You can certainly tailor it to yourself. The other thing to do is to tailor it to your local situation. The other thing to do is you can use this also to promote your own program and to put at the end there's kind of a punchline about no matter what you're doing, you should go see a housing counselor, and you can put your agency name in there and contact information and get a little promotion out of it.
Okay. I'll also just throw out that there's likely to be coverage, and I would think all papers will have a story on this. So referencing a story that the paper does on this so it's directly responding to something they wrote will help as well.
Good. Let's go to HUD updates really quickly. Jointly with a meeting in Phoenix, Secretary Castro is there, and as you know, we asked him last September when he's going out into around the country making speeches, can he stop by housing counseling programs and bring the media along? And so this is he's going to visit an agency in Phoenix. This is the third time he's done this, so I mean this is actually great that it's a small but valuable campaign to get the word out about our programs. We're not sure I think it was either going to be Chicanos por la Cosa or NHS of Phoenix, but one of those groups hopefully he's going to be visiting this afternoon. And I think we have some clients to meet and help underscore the message that was being done in the President's speech. So very nice to hear. A couple quick points. The quarterly reports that are due, it's come up on our list and in the calls that HCO is only going to complete its reporting capacity for the current report by January 12th, and many agencies working with the intermediary have deadlines like the 15th or sometimes even earlier, and didn't give them enough time to be able to properly vet this. We are hearing that some agencies have been granted extensions on the reporting deadline it's a 30-day deadline to the end of January. So the good news is that if you need more time, talk to your point of contact, and looks like HUD is being able to be flexible on this. Quick added update on HAWK. So HAWK, the purchase part of HAWK, which we've discussed a great deal in the last call, in the last meeting, as we know, was defunded in the budget that was recently passed, and so that's being wound down. But back to work, that section of HAWK will continue and will still be available to people. And the understanding is that was not covered by the budget provision. On certification update, we had both Ruth and Brian from HUD were at our meeting and said that we can expect an announcement in March, and that, as I understand it now, that's when the certification process is expected to start, but that they're hoping to be able to do some kind of an announcement with enough detail in it to help groups make plans in this month still, so that hopefully there'll be something that'll give us a little bit of lead time on what the certification process will look like. HUD has limited what they can do about this just by the legalities of rulemaking, so they're trying to figure out how to be as useful to groups as possible, and that's the only complication there. Okay, so moving on. So we have the NCLR NHRC joint report. This is on the mortgage servicing standards, which we did last summer, and this was a nice effort which many of you participated in. Do we have Nancy on the line?
Yeah, Bruce, can you hear me?
We can hear you clearly. So
fantastic.
So Nancy from NCLR is
joining us here, and why don't you give us a quick rundown of where things stand?
Yeah, so we are in the process of completing the highlights of that nice and extensive survey that we took, and there are some top lines that I wanted to share today, and then we plan to finalize and post probably today or tomorrow. And as Bruce mentioned, it's one day before the Saturday's anniversary, January 10, of the servicing standards being deployed in 2014. And then we'll see, I guess, how the next year goes. But really appreciate everyone's participation. These findings are always extremely helpful, and CFPB is queued up to look at this finding. They're excited to see what we have, and they want to hear more from counselors. So just as some quick top lines, what we discovered and what we heard from you guys is that there continues to be widespread noncompliance when it comes to losing documents, missing deadlines, and then there's the added piece of servicers not communicating with heirs should a mortgage holder pass away. So, and Bruce, correct me if I'm wrong, but in the CFPB, they've opened a comment period directly to respond to that helping heirs challenge. I don't know if you're on mute, but there's been a subsequent public comment period open because they have heard so much about that one particular piece. But our hope is that not only will the CFPB continue to improve their servicing standards based on the survey and other pieces, but that they will finally incorporate language access needs. So just quickly going back to some of the other findings, we have the loss of documents, communication, and so on. And then we see servicer noncompliance remains high with single points of contact. You guys let us know that. The initiating foreclosure before the legal deadline of 120 days and dual tracking. Those pieces have improved as far as we heard, but they continue to be a problem. And then the other outstanding chunk of issues involves language access. So folks who prefer non-English, they may have received documents originally with their mortgage in another language, or they might be trying to submit subsequent documents, even federally drafted official documents, and servicers are not accepting those. But where we heard in particular that 48% of housing counselors reported servicers rarely or never provide written communication to limited English proficient borrowers in their preferred language. The point of contact fluency, I know Bruce is very good at articulating this issue. That remains to be a problem where folks might be able to speak Spanish, for example, but they cannot speak to the technicality, or they don't have the technical expertise to communicate both in Spanish and to deliver the message that the family needs to know about their own mortgage. And then the translate so that goes with both translator language and then the point of contact, which often does not speak anything but English to clients. So with these, there are other findings. It was very rich in the responses you gave. We featured some quotes that we received, and then also there are a series of recommendations that we hope to follow up with the CFPB about. And so we'd love for you guys to take a look at this and respond to us directly, distribute it to your networks, or use it in any way that you find useful. I know that we are already sending these to, or we have a plan to send this to our funders to say they're still in need. We want to talk to CFPB, let them know they've done a fairly good job, but there are still needs. And then there are other components, maybe to the media or so on, where we can take these issues and say, yes, folks are, there might be some recovery out there, but we are still struggling and seeing these things. I hope that's helpful, and of course anyone can email me or Bruce or Matthew questions directly, but I'm sure you'll see this in your email boxes as soon as it's posted. Thanks, Bruce.
Great. Thank you, Nancy. We'll certainly, when it's finally available, we will post it onto the leaders list and be available for everybody to take a look at. But a big effort by all, so thanks a lot. Good. And now let's move on to dealing with mortgage complaints. And the CFPB has a fairly robust consumer complaint system. And some of you, I think, have tested it out. But the big concern is that we still struggle to get resolutions on some kinds of cases. So Ruth Susswine, who's been a housing advocate, consumer advocate for a long time and a leader in this field, has been working with the CFPB and leading a group of housing advocates around making the consumer complaint system work more effectively. And she's been a friend to all of us, so we have to appreciate the work she's been doing. But we now are in a conversation, or she's helped engineer a conversation with the CFPB that will hopefully move this forward, and we want to get your direct input. So, Ruth, are you with us?
Hi, Bruce. Can you hear me?
We can.
Terrific. So thank you, Bruce. Thanks, Matthew, for inviting me to join you all today. Happy New Year, everyone. I wanted to give you a little info on where we stand. So as you know, the complaint process for the CFPB handles all kinds of complaints, and you probably know that they can accept complaints in up to 180 languages, Spanish immediately, and many, many others otherwise. But of course, as you also know, the main sticking point for assistance with lots of these problems that are presented to the CFPB relate to mortgages in one way or another, foreclosures, loan mods, mortgage servicing problems. You know, these, of course, as you know, are the toughest ones for them to deal with. And we've been talking to the CFPB for quite a while now, the complaint team specifically, about how to improve resolution, how to improve assistance to individuals and overall assistance on mortgage-related and foreclosure-related complaints. And we've been talking for a long time about sitting down with them and hashing out some of these problems and seeing if we can really make some progress toward resolution. So we've gotten the CFPB to agree to a brainstorming meeting coming up in a couple of weeks in January, on January 20th, as a matter of fact, and where we're going to sit down with them in what's hoped to be an informal way to really try to work with them on the specifics of the problems that people like your organizations are having, direct service, direct counseling organizations are having with trying to resolve loan modification problems, wrong foreclosures, and other mortgage-related issues. And the idea is really to offer some practical solutions to them, to hear where they're getting stuck and maybe helping them get unstuck, and obviously improve the process. Let me throw out a couple of things. We've had one planning call for this meeting with the CFPB already, and another one is upcoming. And so some of the issues we are planning on covering at this meeting have to do with, of course, freezing foreclosures and dealing with mortgage rule violations. For instance, you know, dual track violations, and many of the things that Nancy just laid out that came out of your survey. So we also want to get into some of the reasons that advocates are hearing for denials, permanent mod denials that are just plain wrong, and try to get some understanding from the Bureau, you know, when they step in, why they wouldn't step in to try to resolve some of these issues, and how we can help them maybe improve their involvement in some of these problems. We're also looking to make a recommendation again about an escalation line. We'd like them to create an escalation line exclusively for housing counselors and legal aid attorneys that really just need some direct contact with the Bureau to kind of get a problem resolved. That seems like it should be very simple, but just is not happening. And one of the other key areas that we know we need to talk to them about is their response, the Bureau's response to individuals and to advocates, and how we know they are not doing a good enough job in making sure that folks know they're either aware of a problem or maybe even working on a problem, and to get some feedback on disputes when a consumer actually or homeowner actually disputes a problem they've already submitted. So those are some of the areas we know we're going to cover, and I'd very much appreciate your input if there are areas that you know your organization is struggling with in dealing with the CFPB, or not dealing with the CFPB because they haven't been helpful. So details that you can offer on problems resolving mortgage-related complaints, I would love to hear either now, if you can raise them, or please feel free to email me, and we can try to include some of that information in this brainstorming session we're planning. The planning call for the meeting with the CFPB is next week. It's Tuesday, January 13th, and we are going to hold that call at 1:30 in the afternoon. And I think you have the call-in information, so I won't announce it, but please either let me know, one, if you'd like to participate in the meeting on the 20th, please RSVP to me. Please join us for the planning call if you are going to participate, and let me know the areas that you think really need some attention, and hopefully some solutions, or at least some information to get us closer to some solutions. So I'd like to open it up for questions now and feedback on mortgage complaints and foreclosure problems.
So we don't have any questions at the moment. Bruce, do you want to add anything?
Well, so I think this is an opportunity that we ought to figure out how we might get some input on. So certainly you can join the planning call on Tuesday. You've got the information on your screen. And that's another way to do this, or emailing Ruth with things. That would be great. But it's worth checking in with your staff, too, about where are the points where, in the servicing world, where things aren't working, where we think CFPB intervention would really be helpful. I mean, one of the things that Ruth mentioned is that we're really interested in the CFPB more aggressively being able to stop a foreclosure from proceeding, so that the proper solutions can get worked out, and create a more of an window of time for people to get a case solved. And then, Ruth, the meeting on the 20th, is that an in-person meeting?
It is an in-person meeting, but we are going to provide a phone number. And so if you or someone on your staff is interested in participating by phone, that is possible. And as we get closer to the January 20th meeting date, I can send out an email, or maybe Bruce or Matthew, you guys can pass it along when I've got the actual dial-in number.
Okay. And I think it'd be good for people, if they're interested, we should kind of line them up ahead of time rather than have people kind of cold call into it, so that they have some background. So,
absolutely. Yeah. So preferably, I would appreciate an RSVP to me. I'm at Consumer Action, the education advocacy nonprofit Consumer Action, and if you would let me know that you want to participate, or someone on your staff wants to participate on January 20th, that would be great. And also, if you can join the planning call on the 13th at 1:30, that too would be helpful. But at a minimum, please, email me, call me, and let me know the kinds of places where you and your staff are getting stuck, and hopefully some thoughts on how to get unstuck on some of these foreclosure problems.
And we did just have a few things come in, so we'll just kind of go through these. The meeting is in Washington, D.C. at the CFPB headquarters. So one person, Rosalind Robinson, flagged having received complaints from clients reporting lenders discouraging help from housing counselors.
Oh, wow.
And we can follow up with Rosalind on that, maybe get some more detail on that. The other, I'm just going to read through, this is dealing with the servicing standards. Since a consumer isn't protected under CFPB regs unless a package is deemed completed 37 days before an auction, we're encountering problems in getting the file deemed complete, or when the underwriter requests another document. After submission of the document, the clock starts again with the decision coming in 30 days. I recently had a file with Chase that went on like this for 3 months. The underwriter would ask for a document, we provide, and they'd start the clock again. Frustrating and unnecessary. CFPB didn't resolve the problem. I will say to that, that's actually something that we included in the recommendations in our report that Nancy was just talking about, and that's the idea that a lot of people have been pushing for, that the protections shouldn't be triggered by a complete application, because we see so much runaround happening with servicers, and it kind of defeats the purpose of a lot of the protections if they keep losing documents and making you resubmit. So what we're pushing CFPB for is to the protections to be triggered by an initial application, which would be, Bruce can elaborate on the documents. It's a request for mortgage assistance, 2 or 3 other things, but it's the basic HAMP package that once the borrower submitted those things, that it's basically that triggers the protections instead. Ruth or Bruce, do you want to add anything on that?
No, not from my end. That sounds right, and that sounds like an excellent solution.
Right. Yeah, but I think that's the kind of thing we want to have come up in the meeting with the CFPB, that people in the field seeing this. So, so the person who submitted that, you should try to get on the prep call. We'd really like to have you be able to speak to that at the meeting itself. And even if you can't fly into D.C., we can have you call in.
And I missed who that was, but we can follow up with you after the call as well. A couple other things that have come in. Continue to have problems with inherited properties. Nancy mentioned, and we haven't dug too deep on the proposal, the new proposal from CFPB. She said she believes there's something in there, so hopefully they have a plan for that, but that's another issue that people are seeing. Someone said they would like to see some discussion on problems that are created when a servicer transfers a loan before accepting a final modification offer back from the homeowner. Someone else says, I find that the problem at large banks, for example, Bank of America, is that the lower level single point of contacts have no idea how to comply with CFPB regulations. Therefore, a lot of my clients just get railroaded by ignorant single points of contact, and then they go into some specifics on a specific case. So that is Elizabeth LaPierre, and we can follow up with her as well.
And that kind of specific case would be helpful, I think.
Yeah. There's a lot of detail. Another person. Go ahead. Yeah.
I was just going. Well, I'll ask at the end. So please feel free to give more examples if you have them.
Okay, I can go into the specific example here. I have a client now who attempted to contact Bank of America numerous times to discuss her husband's death and how to pay the mortgage. She is on the deed, not on the note. She was told to not pay the mortgage. Thereafter, she was told that they couldn't talk to her anymore. Is there any action to educate these single points of contact or increase the caliber of sophistication that borrowers experience when they call single points of contact?
Okay. An issue we can raise.
Great.
Thank you.
Absolutely, and we'll follow up. We can follow up with all these folks, and they're pouring in now. I have a servicer who kept sending us to a mailbox at their high-risk department. They never reviewed the packet and sat on it for almost 8 weeks. After numerous attempts to communicate, they asked us to start over.
And so that's a violation of the CFPB regs, and the problem is how to get that enforced.
All right. Others, we have a client who's approved for a modification. The loan was transferred from the servicer back to the bank that transferred it, and the modification was not accepted.
With no reason?
It doesn't. That's from Bobby Ball. Bobby, if you want to elaborate, if there's any reason given. Sorry, I'm just going through the. Yes, is the answer to that. So I think there's no reason given.
So that's another violation.
Someone else says, I had a client's file transferred to a servicer with one representative that speaks Spanish. So I guess it's a lack of adequate language skills on the part of the new servicer. Lender representatives' inconsistencies reported for amount held in suspense accounts and modifications offered causing confusion to client. Someone else says, reasons typically given for not accepting a modification is we don't have to, in quotes.
Huh.
Whoa, who was the servicer on that one? So we'd love to know who the servicer was. We'd love to document that one.
Yeah.
Yeah, this is all very helpful, and again, we can follow up with the folks. One last one, I think, CFPB regulations relating to surviving spouses' rights don't have enough teeth, nor are they specific enough regarding what CFPB requires the bank to do to assist surviving spouses or other successors. And again, hopefully that's something that's addressed in the new proposed amendments, but I can't say, Ruth, I don't know if you know any more about the new proposal than I do.
Not at this point, no.
Yeah.
I have a question to just throw out to folks before we wrap up this portion of your meeting, and that is if you have any feedback on CFPB's input. Have you seen CFPB step in places where you have experienced problems or actual violations? And or have you never seen that? What kind of input has CFPB had with any of these problems?
And CFPB, and you're asking specifically if somebody submitted a complaint.
Correct.
I mean, right,
Correct.
because the trick is that CFPB wouldn't be involved if they didn't know about it. So essentially, if you submitted a complaint, it'd be great to know what kind of response you've gotten and whether it was effective or not, whether there was follow-up, all those things.
And if you've actually gone further and filed a dispute on behalf of a client, or if you know your client has filed a dispute, because that is part of the complaint process, where if a consumer complains or an advocate complains on behalf of the consumer, and the company's response is wholly unsatisfactory, the consumer has the right to dispute, which essentially just means they're not accepting the company's response. It doesn't require anything of the company. It doesn't require the CFPB to get involved, but it might. But the CFPB does look at who is disputing and why, and they have said in the past that when they see a dispute, there are times when they will get involved. So I'd be quite interested to hear if you have any experience with their dispute process.
Great, and we had a lot more roll in. I think for time we won't go through anymore, but we will do some follow-up with everyone who submitted, who made a comment after the call, and we'll connect you with Ruth. But yeah, that was very helpful. Thanks, everyone.
Thank you very much.
Well, thank you so much, Ruth, and thank you for all the good work, and we'll be talking with you. Okay.
Thank you.
Excellent. So let's move on for plans for 2015. So a lot of things are bubbling in the system, a lot of things we've started work on, but things that we need to really move forward on. And I just wanted to punch up some highlights, and if there are things that we're missing on the list, please let us know. This won't be comprehensive, but it's to give you a flavor of things down the road. So very high on our list is FHFA. They have their new 3% down product, and as we've come to learn, it doesn't have a housing counseling requirement. It has an education or counseling requirement, and that standard can be pretty low. We'd like the standard to be a HUD-approved housing counseling agency, but currently it can be a workbook through CreditSmart. It could be a for-profit company. It could be a mortgage insurer. And we think that these are not the right ways to go, and we're going to press FHFA to do to really try to get on board with what the government, what HUD has invested so much in the HUD-approved housing counseling world. And we are getting some indications that this isn't a closed door, that that this is something that they are going to think about and consider. So we will, in the next couple of months, we'll probably ask for a meeting with Mel Watt, and we'll certainly meet with people lower on the ladder and keep pressing on this. We do feel like this is a very important issue for the future of our work, to really institutionalize our work, and especially with the loss of HAWC, this makes this all that much more important. On language access, we will continue doing lots of work on many, many fronts. The one that is maybe the easiest to put your finger on is with FHFA and getting them to add preferred language into the new mortgage application. If you were at the leaders meeting, there was quite a spirited conversation about it, and Laura Arce from FHFA gave a really great talk about how valuable this would be without actually saying that they were going to do it. So we're going to try to pursue that pretty strongly, and also in their equivalent of the HAMP application, the ones that Fannie and Freddie use. I'm blanking out on the name right now, but getting language preference into that document as well will help start institutionalizing people who already have a mortgage and building up a database with the services. There'll be a lot more. We'll do a lot around language access, and it often fits neatly with a lot of other access issues we're doing. So I won't go through the whole list, but give you a flavor of it. And the as you know, the HUD task force has done a lot of good work in the this past year, and we had a very successful time here. It does look like we have a FREEN. We don't have a FREEN. So I just was hoping FREEN could join us, but looks like we're not getting through here. Well, so anyways, we will continue working on working with HUD on trying to get better communication systems, better reporting systems. We'll do a follow-up with the senior managers at the Office of Housing Counseling, probably with Sarah Jarik and company, and we will also bring them to the larger group, but the task force itself will continue meeting and providing the valuable work it's doing. So certainly if there are concerns you've got that are HUD related, feel free to either send them to us and to a FREEN, or join the task force to make sure that they come up. And we have this has become kind of the place where HUD is looking to get feedback and to float solutions. So it's a pretty vibrant conversation, pretty valuable conversation, and we will continue to do our work with them. The next area will be building support in Congress. As you know, things have changed dramatically. Matthew, do you want to give a quick overview here?
Yeah, so this is something, folks that are familiar with these calls and our emails, it's something that is always a priority for us, but it's especially important now that the Republicans are controlling both the House and the Senate. And also in light of some of the things that we saw happen during the lame duck, the defunding of Hawk, as well as the letter we talked about from Hensarling and Goodlate, asking Justice Department questions about funding for counseling in some of the settlements that we've seen recently. So our strategy to kind of push back is really to educate Congress and especially Republicans about the value of housing counseling and do our best to dispel any concerns and really, sell the positive message that there is for housing counseling. So the first step, but our focus especially is going to be on Republicans and especially on those few moderate Republicans that there are in Congress, in the House in particular. So the first step is going to be working with some of our moderate Republican allies. The goal is going to be developing our message specifically for Republicans and moderate Republicans. Although we're going to try to be more broad than just moderates, but you obviously want to focus where you have the most hope of having results. We're going to identify the moderate Republicans that we should be trying to work with and developing the message. We are going to plan on, and we're not going to have a lead role in this, but we'll definitely be participating in doing a Hill briefing. I think we're going to try to do that as early in the new Congress as possible. Those are always good events, and hopefully get a good number of staff and maybe some members there. And just again, it's an educational thing, talking about positively about housing counseling. We're going to plan. NHRC is going to plan on doing a series of meetings throughout the year in district, and that will be trying to connect local groups with staff and, if possible, with members in the district. Building those relationships. Again, educating them on the value of housing counseling. We're going to develop toolkits that for congressional offices to help them to connect with local agencies, so that when they have constituents come in that need services that that local agencies can provide, that they know exactly how to go about connecting with agencies. And we'll do the flip as well, toolkits to connect agencies with district offices. Those are some of the things we have planned. We have really quite a lot planned for 2015, but that's just some of our goal to build our relationships in Congress and really build support for housing counseling on Capitol Hill.
We have a big job to do here in this area. I've done a lot of thinking about it. Some of this will rest on your shoulders. That you're in the field, and some of the people you're working with live in districts that are represented by Republicans, and we're going to need to really raise our visibility. There are many things that are appealing about the work we do. Matthew's put together some talking points that are more specifically geared towards the Republican worldview, but it's about self-sufficiency, it's about growth, about jobs, about financial independence and not relying so much on government, and there are parts of our work that really appeal to that part of the conservative perspective. So it's we're going to have to get good at this. So there's no way that we can function in the current environment without having deeper and more effective relationships. So we got some ideas about how to ease this in, and we'll be making contacts and trying to develop some intros. But the key work will be done by you out in the field, and Matthew will contact you, some of you, and certainly you should volunteer if you've got opportunities, and reach out to him. This has to be a big part of our work for the upcoming year, and I think we have to
get to be much better at this. Okay, so also access to credit and affordable housing. We will continue to look at, and we're very interested in what you're seeing in the field about what barriers people have in order to be able to qualify for a mortgage. We traditionally always said access to credit, and we've now added and affordable housing because of the whole affordability issue in some of your markets where housing prices are so high that low and moderate income people are being priced out of the market. And we'll do probably some work around cash buyers. We'll try to see if there's some impact we can have on that side, and then think about are there some other ways to address the affordability challenge. And we'll work we'll continue to work in the access to credit field. I am not expecting that the housing finance legislation will be an active part of our work outside of a small part of the bigger picture, but we'll see. You can never tell what happens in the future, and we'll certainly monitor it closely. At the same time, we want to say that the foreclosure crisis is not over, and we will continue doing work around improving HAMP and trying to get some more benefits for people. We're continuing a conversation with the Treasury Department about possibly getting some more targeted marketing that would drive people to local housing counseling groups. We'll try to get the most out of those programs, and also I think we all jointly want to do some work to communicate that that while there are lots of improvements in the housing market, there's still people struggling, and we don't want to abandon those people in the rush to move over to other work. We're going to continue doing our work around branding housing counseling and building public awareness, and some of that might be jointly with HUD. We're going to try some other creative things, see if we can't get maybe some college programs involved in this in marketing. We're open to ideas here about how to make this happen, but it is sort of one of our longer-term goals is to make housing counseling a much more universal concept of people going to it and going to counselors at the right time before they've made major financial decisions. So we'll continue working in that area, and hopefully there'll be some interesting things that we'll have to roll out this spring on it. And then we'll provide educational support for the housing counseling community, and we'll continue doing webinars. We are looking at ones around social media, around technology and communications. We have the members series around compliance, which we just started but have a pretty robust schedule for. And we'll explore putting together some tools, and if you've got some tools you think would be good for the rest of the counseling community to use, spreadsheets that make your work more effectively, toolkits that help communicate more effectively, things like that. We're very interested in trying to figure those out and make them universally available to people. And we may put together a repository of forms that groups use so that people can have some choices about what they might when they're needing to make up a form for one thing or another, that they have a place to go and look at some of these things. So I think we're planning for a large active year this coming year, but I have to say we really appreciate all the engagement that you all have had. We have had an astonishing number of high-level meetings throughout the year with decision makers that have been well represented by the housing counseling community. Many of you have traveled across the country to make some of these, and you kind of give this a fresh and knowledgeable voice to policymakers who are often very, very removed from the work that you do. So this has been incredibly valuable. I'm very glad we're where we are at, and it's also clear we have a lot of more ground to cover, and so we're looking forward to
2015. And if we could keep anything like the level of participation we had in 2014, we'll be in great, great shape.
We did have one person
Oh, yeah.
jump in with another suggestion, which is action around FHFA repurchase of Fannie Freddie homes by borrowers still in the home and principal relief for FHFA loans.
Yeah, so principal relief, principal reduction, that's going to be a major, major issue. So there was some progress on being able to repurchase property. So let's, maybe on the next call, we ought to pull that guidance up and see if that's what if that meets the need, and if the person who wrote in is familiar with it, if there's a gap. Now's the time to tell us, because we will be talking to FHFA around a variety of issues, and glad to add that to the list again. But yeah, you can't ever get away from principal reduction. I'm glad you brought that up.
And then one other, this kind of goes to the messaging, and this is from a friend, suggest using good credit in our language instead of just credit so as to steer clear from the credit that got the country in trouble. And that's something that is absolutely relevant in the sample letter to the editor that we sent out, and in a lot of the materials, talking points I've seen around the president's announcement. It talks about extending credit to credit-worthy borrowers. So that's in the same vein as what Efreen's suggesting. But I think that is really important to pushing back against the narrative of we're slipping back into this pre-crisis subprime lending sort of thing.
Very good, very, very helpful.
One other, and I'm not positive whether it's a question or a suggestion, but from Steve Tercel, whether there's anything new on the Housing Trust Fund. I mean, there was the announcement that they were going to start paying into it again. I'm not sure if that's a suggestion that we work more on that, or just wondering if there's any update.
Yeah, so Housing Trust Fund is a fund basically aimed at for very low-income people, rentals, multifamily rentals, and it had not been funded. It was mandated in Congress, but not ever funded by Fannie and Freddie under the old FHFA regime, and Mel Watt turned that around. They were being sued by the Low-Income Housing Coalition and probably others, and so that's turning out to be something of a success story. But I'm not an expert on when that will actually have money in place and they'll be able to distribute the funds. But that's valuable. I think we'll also continue monitoring settlements, and we think there are some settlements still in the pipeline, and trying to make them more useful to people. And one issue, which is we'll continue to push, is where there's principal reduction, getting it so housing counselors can actually get that principal reduction for their clients. And we've elevated that with Bank of America and Citi and the most recent ones, and actually probably should raise this with Chase as well. Good. Okay. Well, as always, thank you so much for all this. We've had a very good year this past year in terms of memberships. So we started the year with 45 memberships. We ended the year with 91, and we've gotten 3 members in since the beginning of the year. So this has been a great year for us, and we've grown a lot. We've added value to being a member, but I really appreciate the fact that it seems like most people join because they think this is a good idea and what we should be doing to build power for the housing counseling community, and we're doing that. We will continue to have discounted credit reports. The cost will go up, and I think across the board, the cost of credit reports are going up by the bureaus. I'd be very interested in knowing what the hike is, what people were paying last year and what they'll be paying this year as their contracts renew. It would be very helpful. We're at the point of just trying to figure out the pricing. There'll be a pricing bump up, but apparently it's across the board in the entire industry, and it looks like we'll still remain well below market, no matter what, save people money. And we've got a much more robust members section on the
that's limited to members on the website, which has resources around down payment programs and around funding sources with in the financial services industry, things for the Federal Home Loan Bank that aren't as widely used as they could be, that are very valuable for some groups. So it'll be things like that, and there's other discounts and some fundraising tools, things like that. So it's been a great year, and we're looking forward to a great 2015 with you all. Our next call will be in 2 weeks, so we're a little bit off schedule because of the New Year start, and so the next call will be on the 22nd in 2 weeks. And we'll be in touch, and when we learn more about, if we get some good information on Secretary Castro's visit to the local counseling agency in Phoenix, we'll spread that around, look out for the report that's coming, and we'll have plenty of follow-up going on. So talk to you all soon. Bye.